Good day everyone, my name is Atingo Sinchebeza. I'm an equity analyst at PSG Wealth Team. Today, I'll be taking you through our latest completed investment idea, MTN. Before we get to the crux of it, we'll look at the executive summary. MTN has a higher organic revenue potential than the rest of its peers. It's positioned across Africa where it has a higher organic growth potential, especially when you compare it to its South African peers. Fintech is another avenue for growth which MTN and other telcos are pursuing, and its geographical positioning is making it well positioned. Regulation, currency, and political risk also provide uncertainty and risk. MTN engaged in an asset realization program which is gaining positive momentum. It has allowed MTN to pay down its debt, restructure the debt, sell inefficient assets, and the localization program by listing some of its subsidiaries. When you look at the risk and return, see positive asymmetry in MTN's valuation. Our recommendation is a buy, and the intrinsic value is 183 Rand, which represent about 11% upside. MTN is one of the largest mobile operators in Africa, with a dominant position in many of the markets it operates in, as indicated in the chart below. It operates mainly as a number 1 or 2 player, where mobile penetration is low, with a large subscriber base which is spread out across Africa, with a high growth potential. Other structural trends we are seeing is a shift from voice to data, and data is now growing around about 20 to 30% CAGR. Vodacom is more positioned towards South Africa, a market which is at a mature stage of its development with very high levels of penetration. Telkom, on the other hand, is growing from a low base, benefiting from its high spectrum allocation. When you look at the telecommunications value chain as depicted in the chart adopted from SGB Security, it is clear that mobile operators like MTN, Vodacom, and Telkom have the lowest rating throughout the whole ecosystem. This is when you compare it with adjacent companies such as your tower companies, digital and communication service companies. And they form the bedrock of content makers such as Facebook, Netflix, Tencent, to name a few, and device manufacturers. Yet they have the lowest ratings in the whole ecosystem. So why has this been the case? As we will expand later on, it's evident that return on invested capital has been correlated with the rating that the market awards to the respective company. And in the chart on the left, you can see that return on invested capital for telcos has been on a declining trend. For MTN in particular, lesser extent Telkom, capital intensity has been the key issue. For MTN, when capex peaked, return on invested capital bottomed, and now MTN has came off the capital intensive phase, and the capex to sales is guided to normalize around these levels, which is a good platform to start off. The other key issue has been leverage. On the chart on the left, we see that MTN has a high gearing compared to its local peers. Cash repatriation issues in the African subsidiaries has further elevated the risk. And the chart on the right shows that debt is mainly funded with hard currency, such as the euro and the dollar, and the mismatch with earnings makes it more riskier than peers, which is predominantly funded in rands. Any economic shock in South Africa puts MTN at a much more elevated risk. So MTN engaged in an asset realization program. Through the asset realization program, they are starting to reshape their balance sheet. They sold some of their assets which had little to no contribution to earnings. This is inclusive of some of the towers in Uganda and Ghana. They listed IHS, a sale and leaseback after the writing of the report, and also pursued localization efforts through the listing of some of their subsidiaries, MTN Uganda, MTN Nigeria, and MTN Botswana. This has helped the company to reduce some of its debt, improving the financing. Now they're targeting 60% rand dominated. And also, they've been able to achieve localization of their subsidiaries through the various listings. To enhance its return on invested capital, MTN is prioritizing building a digital platform through a money market offering, which is a capital-light business model. It's still small as a percentage of revenue, 9.9% as a percentage of sales, whilst Vodacom has 8.2%, Safaricom 33%. When we look at the return on invested capital on the right, we can see that Vodacom is 16.2%, Safaricom is 45.4%, MTN 15.6%. So to a large extent, as the money market offering or the fintech offering grows as a proportion of sales, it does enhance return on invested capital. Currently, the money market offering or fintech opportunity is still small as a percentage of revenue, and MTN is targeting about 20% of revenue by 2025. Vodacom is also targeting to a similar proportion by 2025, and it's still a journey to get there, but we think as we move forward and as this becomes bigger contribution to sales, it will help improve return on invested capital. As mentioned, mobile money is growing faster than most part of the business, and the contribution is still low within the mix of revenue. When we think about the company's ratings, we first look at the empirical evidence, and as you can see, for Safaricom, which has a higher return on invested capital, it generally has a higher rating given by the market, and when it has a lower return on invested capital, like a Telkom, Vodacom, Tanzania, generally get a lower return on invested capital. So we think MTN, where it is at a 4 times, it can improve, as we mentioned, there's quite a lot of avenues that can help it improve its return on invested capital, such as selling inefficient assets, reshaping the balance sheet through the asset realization program, and the fintech opportunity. So we give MTN a higher rating of about 5.3 times on our base case. For our bull case, we peg it just slightly below where Vodacom is at the 7 times, we put it at 6.6 times. And in our bearish case, we have it at slightly higher than where Telkom is at 4.3 times. So on this slide, we summarize the different scenarios. For our bear case, we use a multiple of 4.3 times, which gives a share price of about 142 times, which represents about a negative 14% downside. For a base case, we use a multiple of 5.4 times, which gives an upside of about 7%. And for a bull case, we use a 6.3 times, which gives an upside of about 27%. And in a probability weighted scenario, we have 11% upside. And then next slide, we'll talk about the key issues in our final remarks. I mean, for a higher rating to be given from where it is at 4 times to a 5.3, return on invested capital needs to improve, and we think MTN has tackled the key issues towards moving that direction. It's positioned well for organic growth and digital inclusion, given where the subscriber base is positioned along the markets in Africa. But the key risk to our investment thesis is definitely a currency regulation, and we think telcos are generally at a higher base as we had abnormal profits during the lockdown. Our intrinsic value is 183 Rand, which represents about 11% upside, and the recommendation is a buy. If you wish to place a trade, please speak to your financial advisor or our trading desk. And thank you for joining us today.